So I want to share with you 5 money mistakes that I see freelancers and small business owners making all the time. I've also made these mistakes myself, and I wanted to share them with you so that I can potentially help you not make these mistakes and just open up the conversation about money as well. So the first big mistake that I see a lot of freelancers and small business owners making with their money is not saving or putting money into a pension. And probably even just the word pension makes you want to roll your eyes and run in the other direction and not think about it, because for some of us that might seem like a really long way away in the future, so why should we be thinking about it now? Obviously, when you are employed and you have an employer, in the UK at least, it's a requirement that your employer sets you up with a pension and starts paying into it for you unless you opt out. Whereas what I see with a lot of business owners and freelancers is it's not a requirement for you to do this for yourself, so it can often be forgotten about or put on the back burner, and you end up actually having nothing, where there are people in employment who are getting those regular contributions and actually building something for their future. So I am definitely not a financial advisor. I cannot advise or tell you where is best to put your money. I know the whole economy is a bit up in the air at the moment, so it's very hard to understand where to invest your money. And if you don't really understand how pensions and investments work at all, what I can definitely recommend is checking out the book You're Not Broke, You're Pre-Rich. It's written by a lady based in the UK, so it is very much UK-based financials, but reading that definitely gave me a really helpful basic understanding of how these things actually all work. So I'll leave a link to that book in the description. But also, if you are looking for something just very basic and low risk, if you're like me and you don't like taking on too much risk in your business, maybe you don't really feel confident or financially savvy enough to look into anything else, there is in the UK a government-backed pension scheme called Nest, which is very, very basic. You don't get a huge amount of return for this, but that could be somewhere that you could just start putting a little bit of money into so that you have something while you start looking into other areas. The other thing that I personally have, which I think is a really great option, again, for people who don't like high risk investments or they're a bit nervous about the whole thing, is a lifetime ISA. Again, this is mainly just relevant for the UK, but with a lifetime ISA, the aim is that you pay into it and you only actually access that money either if you are needing that money to buy your first property, or if you reach, I think it's age 60 or retirement age, and then you can access that money, and any interest that you make on it is tax-free. The other great thing about it is that when you pay into it, you actually get a 25% government bonus. So the government will contribute 25% of what you've put in there as a bonus. And I think that is up to £1,000 a year you can get for free from the government if you are paying into this lifetime ISA. So those are just 2 very basic kind of starter things that you can do to make steps towards this if you currently have nothing. So mistake number 2 is not getting insurance for your business. So you may think about business insurance as just being something like public liability insurance, which you may not technically need if you are an online-based business, for example. However, there are other types of business insurance that even online business owners like myself, where all I'm doing each day is sat at a desk being on my computer, there are other things that you might want to look into. For example, insuring any pieces of equipment that you have, insuring your office, insuring stock if you have a product-based business, such as a jewellery maker, for example, and you have hundreds of pounds worth of stock in an office or in your home. If someone broke into your home and stole all of that, you would be out of pocket for all of that money unless you have actually insured that. So there's kind of contents and equipment insurance that you could look into, but also insurance that can protect you for the costs of legal fees. For example, even if you're an online business, you might have contracts and things like that with clients. If you end up getting into an issue with someone, or maybe someone even tries to sue you, you may need to be paying for legal fees to help you with that. And if you've got business insurance, that can then cover those fees so that you're not left with a huge bill that you have to pay. I personally have my business insurance with Admiral, but there are loads and loads of other insurance suppliers that can give you a quote based on what you actually need, so I definitely recommend going and having a look. Mistake number 3 is one that I have definitely done, and that is not saving for tax. So a bit of a backstory. Years ago, I had an accountant helping me with all of my bookkeeping, all of my accounts, everything, and I just hated being involved in the financial side of my business. So I tried to avoid it as much as I could. I didn't really look at the numbers of what my business was making each month or what I was spending each month. I just kind of looked at my accounts at the end of the year that my accountant sent to me and was like, great, okay, cool, I'll sign off on that. What that ended up meaning was I wasn't prepared when it came to the end of the year and I got my tax bill for what I needed to pay in terms of corporation tax and my own personal tax as well. Because I hadn't been involved in any of the numbers in my business on a monthly basis or even a quarterly or half-yearly basis, I hadn't looked at it, so I hadn't made any provisions for tax. I didn't fully understand how that all worked. I just buried my head in the sand with it, and that meant that I had a huge bill that I then had to basically take out of my savings to pay. Luckily, I'm fortunate enough that I was able to pay that from my savings, but had I not, I could have got into difficulties with that, and I do know of people who have had that situation. So if you're not a numbers person, I get it, it's very tempting to bury your head in the sand with all of it, but if you just spend a little bit of time understanding what you actually need to put away each month, based on what income you're making, it just means that when you get your tax bill at the end of the year, you can breathe a sigh of relief because you have that money stored away and saved up. In fact, I just had my tax bill come through, and because I've been saving for more than I actually need to over the last couple of years for my tax, I ended up having loads of money left, which I then just paid myself as a bonus at the end of the year. But definitely speak to someone about it because it is not fun having a huge bill that you weren't expecting. The fourth mistake, and the point that I wanted to bring up, is kind of related to that because it's about not staying up to date with your financials each month. As I said, I ended up handing off all of the responsibility of all of my bookkeeping and financials to an accountant, so I didn't have any visibility of it myself, which was fine in the short term because I felt less stressed because someone else was dealing with it, but in the long term it wasn't good because I didn't actually have any idea of what was going on in my business. What I do now is I schedule in a time at the end of each month to go through my QuickBooks account, that's the software that I use for my bookkeeping, do all of the receipts and invoices, matching things up and actual bookkeeping tasks myself. And I actually make a note in a spreadsheet of what revenue I've made, what I've spent, and what profit I've made in the month. It's all there in QuickBooks as well, but it helps me to write it down separately. And that way, even though I do have an accountant who sorts things out at the end of the year in terms of my tax returns, I have visibility of it each month. I can see what's going in, coming out, where I'm spending the most, what's bringing me the most income, and it's just generally really helpful. And it means that I'm able to know, okay, I've made this much money in this month. That means I need to now put 20 to 30% of that away into a savings pot to then eventually pay for my tax. And my fifth point, again, is slightly relevant to that, and that is not putting away money for some profit or benefit to you. And this concept is kind of from the Profit First method, which is a book that, again, I will link to in the description. It's honestly game-changing once you start looking at your finances in this way, because what I end up doing each month is not only putting aside 20 to 30% of what I've made into a pot for my tax, I also put aside 5% of what I've made into a pot called profit. You could also call this pot bonus or whatever you like. Basically, that 5% or 10%, it could actually be any percentage that you like. My preference is just 5%. That pot is something that is dedicated to you. You get to spend that on whatever you like. It could be a business expense, it could be a personal expense, you could pay it to yourself as a bonus or a dividend. But what it means is you're actually putting the focus on getting a benefit from your business. And as business owners, it's really easy to get caught up in the whole hamster wheel of working. You end up working more hours than you probably were planning to when you left a 9-to-5 job. You don't get things like pension, maternity leave, all of that set up for you when you run a business as well. So you're taking on more risk. And so you really want to be making sure that you're actually getting a benefit from running a business. Obviously, the money that you make in general is probably a benefit to you, but oftentimes that can just get lost in the constant cycle of business expenses and paying invoices and things like that. So having a dedicated pot of money that is purely for you to just spend on yourself just makes it feel like you're really doing something that's beneficial and giving you a real reason for why you're doing this and not just being employed, where sometimes it does look like it's a hell of a lot easier. definitely check out the Profit First book if you are interested in setting this up for yourself. I'm also planning on doing a podcast episode and YouTube video about what I've actually spent my Profit First bonus pot of money on this year, in case you're interested on where that has actually gone and what I've decided to invest in based on that extra little percentage there. So if you are interested in that, make sure that you hit the subscribe button to make sure you are definitely subscribed to my YouTube channel so that you can see when that next video comes out. Thanks so much for watching, and I'll see you again next week.